right, good day traders. Today we want to bring your attention to December copper, and we're watching for a potential bearish setup in the December copper contract. This right here is where we want to pay attention to. This is where we are currently, right here at the beginning of October, and what we really want to focus on are the black and the purple lines. These represent the 15 and 30-year historical price average, respectively. Now, notice that we don't anticipate a huge sell-off like we do back in here, or perhaps even back here where we've got major topping action, but we do suggest that we're likely to come trade to the downside based on 5, 15, and 30-year historical price averages. At worst, we may just trade sideways, but we know that we probably do not want to remain in short positions as we enter mid-November, where you can see prices tend to shoot to the upside here heading into December. So if we take a look at the chart, we want to see what's going on. So if we go to a weekly chart, what we've got is we've got a pretty steep trend line. And you'll notice that over the last couple of weeks here, this is a weekly chart, the last couple of weeks we've pushed up into this area of resistance. Why is this area considered resistance? Well, look at it as this is where the bears were finally able to step in and push to make new lows, taking out these lows and these lows and these lows that have held for several weeks, if not months. We pushed down, and then market came back up, served as resistance, and now we're pushing back up, and then we pushed up again, sold off, and now we push back up into this area again, looking like we were potentially going to break out here in mid-September and make a run up to these highs here, but the bears stepped back in and pushed the market lower. So we've got a pretty steep trend line here going all the way back to March, and we pierced or broke through that trend line this week, and it looks like we are likely to close above that trend line as of this recording. So if we flip to back to the daily chart, we've got a large bullish candle taking place right now. But what we also want to look at is this simply a trend line retest? So we've broken the trend line that's held again since March, broke that trend line with force yesterday, and now we're coming back up to retest. Doesn't mean that the market cannot continue to shoot up higher. If it does, the trade setup will be negated. But what we do want to pay attention to, does this trend line hold, and does all of this resistance hold? What we also have taking place is a potential head and shoulders top. We could draw a left shoulder there, a head, and a right shoulder there, which would give us a confirmed head and shoulders top, which clearly puts us down under these support areas. So if we do get another break back down below and a potential retest, our targets would be a measure from the top of the head down to the neckline and then measure down. Notice that would take us right to this area here, which was the area where we last broke out to new highs. So that's what we look for when we look for setups. We like multiple areas of confluence to help put the odds in our favor. So again, the process is a high probability seasonal pattern combined with a high probability technical pattern. I'll be releasing my top 10 ideas this coming Sunday, so go ahead and become a member of the Seasonal Swing Trader Pro community. Good luck, good trading, and we'll see you on the next update.